point.
Okay. If I may ask you on the rupee, the currency has been in pain because of a lot of factors, including, I think, tariffs are part of it. Crude prices, I would say, a year ago to now, were pretty much the same. Eased off, gone up, eased off. So that's not the big pain point. Do you see the rupee now strengthening? And maybe if we see a reversal of what has happened with foreign flows, or at least FPI flows, how do you think that figure or that situation now pairs out?
I personally think that the rupee will be one of the big beneficiaries of this trade agreement with the United States, because with respect to foreign investors, whether direct or portfolio investors, for them this was a stumbling block, because questions were raised about whether China +1 was becoming India +1, etc. And portfolio flows also, apart from other considerations, valuations, no AI story, etc. I think this damaged the sentiment quite significantly, and to the extent that this is removed, this barrier is removed, I do believe that the Indian rupee in 26-27 will be one of the beneficiaries of this trade agreement with the US.
Do we retrace a lot of the losses that we've seen? I think close to 50 basis. Do we retrace the losses in the last 1 year or so? Or
loss of what?
I mean the slide of the rupee, yeah.
Look, I mean, it's difficult to give you a precise number in terms of the forecast for the Indian rupee dollar exchange rate, but I do believe that we will definitely at least see the rupee not following a one-way path towards weaker levels. But again, as I said in the case of your earlier question about the growth rate, there are other things that are also happening simultaneously, and in the economic survey, we did point out that in general, if you take a last 5-year view or last since millennium kind of view, the Indian rupee has not been an outlier in terms of depreciating against the US dollar.
Mr. Nageshwaran, how are you reading the zero tariff? I wanted to understand, as India is getting zero tariff on select items, however, US is getting across the basket. Wanted to understand how you're reading that. Is it concerning, A? And second, do you see any impact coming on overall government receipts with government receipts with customs playing an important role in this with 18% tariff?
No, I think two things. First, on the second question on government receipts, right? No, look, when you have an expanded economic activity happening, the customs duty receipts being on the lower side is easily offset by expanded economic activity and tax revenues coming from other sources, whether it is employment generation leading to higher income taxes, or whether it is GST transactions, multiplier effects of higher economic activity and higher domestic production to cater to external markets, because now you have access to different markets, EU countries and the US, that easily will take care of the customs duty receipts angle that you are pointing out. But look, zero duties our reduced duties are part and parcel of every trade agreement we have entered into. So why is it this different? I mean, we have agreed to reduce import duties on automobiles as part of the European Union trade agreement as well. So, I mean, that is part of the game. You reduce access and you reduce duties and they reduce duties, and that is how you expand the pie in total. So this is nothing unique about this.
No, why I'm asking that, because